If you're going to invest in cryptocurrencies, then most experts would say that you should only invest what you can afford to lose. Why? Simply because the crypto world and other DeFi spaces are the riskiest types of investment because of extreme volatility. But would you believe that there's a protocol that could be useful not only to break down these risks, but also to tokenize them? Yeah, you heard right. The Barnbridge is the key for investors to make safe trades in DeFi spaces and secure massive gains inside the industry. Well, if you want to know more about Barnbridge, then this video perfectly fits you, because today we're going to explore this amazing DeFi protocol. We'll take on key things about how it works alongside its token, the Bond token, as well as what the future holds for this project. So stay on this video and we'll dive deep into this. Hello everyone and welcome back to Crypton. And before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications so you won't miss our amazing videos about cryptocurrency. If you're an aspiring investor to enter the decentralized finance or DeFi ecosystem, then you should be aware that this market is all about risk. Well, those persons who aren't brave enough to take risks with their digital assets won't be successful in the industry. Usually, it's all about risk versus rewards. Higher risks equate to higher gains or higher losses. However, investors cannot always determine the risk that underlies their investments, and this is the specific problem that Barnbridge wants to solve. So, what is Barnbridge? Well, Barnbridge is a protocol for tokenizing risk and fluctuations. By tokenizing the exposure to risks and market fluctuations, it can help conservative investors to properly manage their digital assets with the volatility of the market. The very aim of this project is to expand the functionality of DeFi when it comes to flexibility and efficiency. This project was officially launched in September of 2020 and was co-founded by Troy Murray and Tyler Ward with their great experience and background in the crypto world as well as with DeFi spaces. Barnbridge is said to be the first cross-platform derivative protocol that focuses on fluctuations in the industry. Its applications mainly allow its users, whether individual investors or institutions, to monitor the risk tolerance as they enter the DeFi ecosystem. It enables users to hedge against market price and yield sensitivity through multiple pools. Moreover, the system utilizes different ways, which we will discuss later, to reduce the risk of digital assets and digital asset yield sensitivity. Specifically, Barnbridge does this by breaking assets into smaller, separating dollar-denominated portions, which are called tranches that can be bought by DeFi investors. From these tranches, the network will create derivatives that can be useful for investors to handle their investments in the safest way. As I said before, Barnbridge is achieving its goal through its applications, the Barnbridge Smart product. For those who don't know, SMART means Structured Market-Adjusted Risk Tranches. In March of 2021, the project finally launched its first application, the Smart Yield Bond. This product is designed to mitigate interest rate volatility with the use of debt-based derivatives. So when a user purchases a Smart Yield Bond, they're buying a tokenized tranche that mainly represents the chosen risk and yield degree from a group of loans deployed on different DeFi lending protocols. The tranches of this application are made up of two types of tokens, the junior and the senior. Junior tokens are ERC20 tokens that can be minted by the users of the said application, while the senior tokens are ERC721 non-fungible tokens, or NFTs, that mainly represent the bonds. When it comes to uses, junior tokens primarily serve as the liquidity that senior bond investors need to receive a stable yield. Moreover, junior tokens are also used to buy risk from senior bond investors. Now, in July of 2021, Barnbridge launched Smart Exposure as the network's second application. It basically allows users to automatically rebalance specific weightings of ERC20 tokens with their respective portfolios. Users also have the choice to choose whether their portfolio will be balanced in a 50-50 or a 75-25 ratio weighting. In addition, this application will also provide automatic portfolio management as it will maintain the chosen weighting ratio of token pairs. This is mainly because of Smart Exposure's asset pools. Furthermore, every token ratio is represented as an ERC20 token alongside its ticker, and can be either traded or used as collateral on other platforms. In September of 2021, the network finally released its third product, the Smart Alpha Bonds. This application allows users to fine-tune their exposure to the performance of an underlying asset. It regularly redistributes an accumulative group of the underlying assets to junior and senior users. Senior users will need to give up some of their assets to the juniors as the price increases, and it will be done vice versa. With this, the outcome will be a two-sided market for asset price risk that can be generalized to any ERC20 token that can be compatible today. Working all together, these applications serve as significant milestones to achieve Barnbridge's goal to smoothen the risk curve and derivatives for mitigation inside the DeFi ecosystem. So, what makes Barnbridge unique from other projects? What is the advantage of this DeFi protocol? As we all know, different sustainable DeFi platforms such as Compound and Aave give over 5% annual percentage yield, or APY, on some assets. This 5% APY can even grow more up to 10% with profitability optimizers like yearn. The main problem with these DeFi platforms is that they don't offer fixed income. And this is where Barnbridge can provide its advantage to both conservative consumers and day traders. It can aggregate yields with fixed income and can even flatten them to improve the system's efficiency. As the network opens it to a wider audience, it makes the crypto industry more predictable and personalized for consumers, and the striking growth will be seen throughout the industry. Now let's move to the most important asset in the Barnbridge ecosystem, the Bond token. Technically, Bond is an ERC20 token in the Ethereum blockchain launched in September of 2020 alongside the Barnbridge protocol. It mainly serves as the network's premier utility and governance token. So if you're planning to enter the Barnbridge platform, then this token will be essential for you. The said token has several functions in the network's ecosystem, from paying all of the fees up to interacting with debt pools. Moreover, the Bond token will also serve as a security and policy management medium inside the network. It is very easy for holders to stake their Bond tokens. This will primarily help users to earn voting rights inside the network. Incentives are given to the participants in the decision-making of the platform, which is one of the best things in Barnbridge. In addition, the platform also sends out Bond token rewards for the liquidity of the network. As of now, the Bond token is trading at $7.37, up by around 11% with a 24-hour trading volume of $52,358,581. Currently, the token's circulating supply is 9,555,349, which equates to a market capitalization of $70,896,445. The current price of the Bond token is considerably lower compared to its all-time high of $185.93 set on October 27th of 2020. But with the current phase of the Barnbridge protocol and its Bond token, should we expect a rise within the next few days? If we're going to look at short-term gains, the Bond token isn't a great investment right now. The said token still shows risking framing segments in the market. Even though it has strong fundamentals, it's actually hard to have a profitable asset in the short term. Moreover, CoinDex concluded that their current sentiment for the Bond token is bearish, as it only showed 9 bullish signals against 20 bearish signals. However, if we're going to look for long-term gains, the Bond token seems to have potential growth in the future. The digital coin price remained optimistic about the Bond token's trajectory in the future. According to its forecast data analysis, the token's price can rally at the level of $10.24 by 2023. By 2025, the Bond token's price is expected to cross a level of $14.89. Then, the said token is on the full potential to have continuous growth through the following years. Now, the question is it really a good investment? Well, the answer is short. For short-term investments, it's below other projects. But for long-term ones, it could be a good one. Barnbridge is one of the most unique and useful projects in the DeFi spaces. Its concept is extremely broad, and can even go beyond the creation of derivatives for yield and volatility. Moreover, the DeFi space contains various risks in different forms. With this, The said project can even extend its scope and innovation to structure and introduce more products that can help it achieve its goal and multiply its value in the future. Well, that's it. What are your thoughts about the Barnbridge protocol and its bond token? Tell us in the comments section below. And while you're here, go ahead and click on one of these two videos on your screen. See you there.